Welcome to Billionaire and wish you all a very happy Mahashivaratri. On this auspicious day, I thought that I'll bring some new learning video where you can actually take very high probability trades. See, most of my videos are all strategies which I use for my trading. Time and again, I have shared, I'm a part-time trader. I'm not a full-time trader. If you want to know how much I make 100% of my capital month on month. I have a very small capital. It's around 50K and I make 100%. So people who follow me, they already know that. So what you need to learn, what is your expectation is first solidify the knowledge and then focus on the money. Straight away, don't focus on the money so that, it will bring a lot of confusion and fear can be very fatal to trading. So Jan 1st to March 1st, today is a holiday. How much I have made? Exactly 1 lakh. Now, how much charges and taxes I have paid? 55, woofing 55%. More than 50% of my money has gone for taxes. Now, if you follow me from Telegram channel, some of the old folks know that I used to make 1 lakh per month last year. My capital itself was 1 lakh. I used to make 1 lakh, 1.2 lakh last year. Now, why all of a sudden this changes? Now I'm in a constant endeavor of trying new methods where I have to try them to come and share here. If I don't try and simply come and share here, then it will not work. So what exactly I'm trying to communicate here is by doing this, sometimes I incur losses, sometimes I overtrade, because of which I have cut down my capital. Maybe from April onwards, once I solidify and master a couple of strategies, I'll be increasing my trading capital to 2 lakh, where you can see very high profit screens like other professional traders. But for now, why I'm showing this is so that you know that I am a winning trader and I've been winning since last 1 year, and every month I'm doubling my capital, so you can confidently follow my strategies and make money. I have released a few strategies videos even last week on advanced VWAP trading concepts. Now this is moving average. Now whenever we come and showcase some trading strategies, it's called a strategy because it has an edge, and this strategy should be used in its purest form. Like I showed you a triple moving average. Yes, the triple moving average works. Now provided if it is used in its purest form, you need to know how to use it, right? So for example, I have told you, so you need to use it whenever the triple moving average crosses on both 15 minutes and 5 minutes. Just showing you an example. Then you have a high probability of market moving up. Now, this is a different moving average concept where you can spot a trade and also you can stay on the right side of the trend. But this needs to be used in its purest essence, right? Now, this works really well with floor pivots. So the moving averages I have used here is 50-day moving average. The purple one, the red one is a 20-day moving average, and the blue one is 5 EMA. Just if you're too scared, trust me, people are scared. I am scared while trading, especially in option. You can keep 5 EMA as stop loss. And once you make money and exit, just don't trade at all. This is my advice. Otherwise, keep 20-day moving average as stop loss, or go from one pivot to next pivot and then trade. Now, what are the conditions for this? The conditions, the prerequisite conditions are, this is one of the most frequently occurring pattern, both in Nifty and Bank Nifty. This I have not traded in stocks because I trade only in options. You can back test. So clear, this works like a charm with Nifty and Bank Nifty. First point. Second point, when this setup works, when will this setup work? This setup will work when 50-day moving average is at the center of the CPR. This is CPR. Okay, I'm going to make it big for you just in case if you cannot see. All right, this is central pivot range, and I want 50-day moving average to be the center condition 1. The next condition is the 20-day moving average or 5 EMA, whatever it is, it needs to be crossing from the top above 50-day moving average or crossing from the bottom from the below 50-day moving average. Either the moving averages should cut like this. See this one? I'm going to make it big for you so that you can understand. So this is not the condition. I'm just showing you an example. The 50-day moving average should be at the center of the CPR. On that particular day, if the price cuts from the bottom or from the top near the central pivot range, it qualifies for a trade, condition 2. Condition 3 is instead of price, if the EMA itself goes above 50-day moving average, say like this is a gap up, but EMA from the bottom has crossed over, either 5 EMA or 20-day moving average, 20 MA, right? Both MA, 20-day moving average, DMA, both are same. It's a simple moving average. It qualifies for a trade. Everything near CPR. And if you follow this, you can identify whether you have a trade tomorrow. If you go to show tomorrow's pivots, you will see this is tomorrow's CPR and the 50-day moving average is in between tomorrow's CPR. So you know tomorrow 50-day moving average is near central CPR and I can anticipate for a trade early in the morning. Now, why I trade in the first opening candle or within first 30 minutes, why I'm so successful. Mind it, if you're a newcomer, I work for an IT company as a project manager and I cannot trade beyond 10 a.m. maximum sometimes if I don't have any stand-up meetings till 10:30. So I don't trade beyond 10:30, but still I double my capital. So if you are a full-time trader, watch till the end and please do subscribe, like, and share your comments. I mean, your comments, your likes are our bread and butter. It encourages us, it motivates us. Most of you folks, don't give a like. I mean, your like can help spread my new YouTube channel and content to a lot of other young traders who can come here, learn everything free of cost and make money, right? Let's create a world where everyone can make money, right? Now, this is tomorrow CPR. So understood how you can spot the trade. Okay, now let me go back. Simple. Strategy is simple, right? Once again, I'll tell you, the condition is 50-day moving average at the opening should be near the central pivot range. And if either the price is cutting the 50-day moving average above or top, it qualifies for a trade. If it is a gap up, you will see the EMA and the 20-day moving average cutting the 50-day moving average, either upside or downside, qualifies for the trade. Clear? Simple? Individually, even if 5 EMA cuts 50-day moving average first, take the trade, because 20-day moving average is a lagging indicator. So 5 is faster EMA, it goes first. So let me quickly show you. So if this condition happens early in the morning, especially in Bank Nifty, anticipate a big trendy day. It can happen even in the afternoon, but the high probability of making money is always during the morning time, because if market needs to trend, it gives the indication early in the morning. By this, you can pick it up. Now watch this one. This was 25th February. 50-day moving average is testing the top circuit anywhere. This 50-day can be anywhere in between the central pivot range. Our condition is it should be near the central pivot range. Sometimes even little lesser is also okay, but you will learn it by experience. For our condition, keep it. Now here, the first candle is a green candle. Boom, 5 EMA crosses above. 20 MA crosses above. Now, even this can help you. So if you know my 20-day moving average for intraday, I have told you price about 20 days in uptrend, when price below 20 days in downtrend, I have told you if it is curving up, curving down. Now, price above 50 days also upside, price below 50 days downside. All right, this is how you need to consider. Now, when the price goes above 50-day, you take a trade, you can target R1 or you can target, continue along with 50, I mean 20-day moving average. When the price comes below 20-day moving average, you can exit. This is up to your risk appetite. Pivot trader always goes from one pivot to next pivot, this pivot to this pivot. Now these dots are previous day high, the yellow is previous weekly high. Okay, weekly low or weekly high. So these are also important pivots. So see where exactly price is facing resistance near this, so you can assume and exit. Now without wasting time, let's go ahead. Now here 50-day moving average is near the central pivot, but crossover has happened on the previous day itself, and there's a huge gap down. You know trend is down. Trend can resume upside only if price goes above 50-day moving average. Keep near, you can take trades near 20-day moving average, but this is completely different strategy. I am not talking about this. I'm talking about when the price is moves very closer to the CPR and cuts 50-day moving average, that is your trading setup. Now here again, uh, gap up, but 20-day and 5 EMA has crossed over in the previous day. Now you can consider the trade on the current morning if 20-day and 5 EMA has crossed over in last 30 minutes, say 310, 320, 330. If it has crossed on the previous day, still you can consider that. So just add this condition, right? So we don't have it. Watch here. So we have 50-day moving average near the CPR. It is a narrow CPR, right? Narrow CPR. Price previous day crossover has happened the 20-day at 3.5, right? It is 3.5. This is where crossover has happened. If you have taken a trade at the opening, yes, you can scalp the points. Your stop loss is, this is also previous day low. S1 below, always trendy. You need to anticipate. Now, however, on this particular day, you have a morning star. So if you don't know price action, I will add the links for price action. There are only 4 types of candlestick patterns which you need to learn to understand the market and make money. When you combine everything, you will be a super trader. But anyway, so if you're trading below S1, your stop loss is hit here. Agreed? Fair enough? Fine. Wait, what is our setup says? Our setup says if the EMA or the candle cuts 50-day moving average, it happened previous day. So if you had taken early after 5 minutes or early in the morning, there is also one more strategy, right? If the price originates from the central pivot range, the next candle is your trade for the next pivot. This is one more trading. But just to keep it simple, watch this one. Price reverses after morning star, above previous day low, above S1. So after this clear indication of pause in downtrend, price starts moving up. Whom does the upper CPR belongs to? Upper CPR belongs to buyer, always buyer. The lower circuit of CPR always belongs to sellers. Now with this, the 50-day purple line is broken here. And if you take a trade here and follow 5 EMA, how many points you're going to make? 37,589. You can go till, where did the price close below 5 EMA here? 37,962. 37,584, consider 600. So 960 means you have 300 points. 360, 400 points one side you can trade, and the time frame is 5 minutes. I'm not asking you to use triple TMA, triple EMA where you need to watch 5 and 15 minutes. This strategy is only for 5 minutes, so don't mix it with anything. Stick true to it and watch this one. 50-day purple line is near the CPR. Okay, where is the crossover happening? The crossover is happening here. Which was the first crossover? 5 EMA. Goes, comes down, tests. Your stop loss should be 50 EMA whenever if you're taking the crossing. Understood? Or 5 EMA. So even if you assume the 50 EMA is holding, and from here, market moves up. 20 and 5 EMA are coming closer. See here, market comes below 20, just gives a sharp pullback. So waiting for stop loss on 5 minutes closing basis is very important in Bank Nifty. Most of you might have seen, you might be in 50 points gain, and all of a sudden market comes and goes 30 points into loss, and you exit because you see 30 points loss, just to see at the close of 5 minutes, it will again move up 20 points. Just to avoid, understand stop loss is very important. Okay, I'll move it very quickly. Watch this one. Okay, the 20 EMA is crossing at the opening. All right, this is at the opening. So you have a evening star. It's not exactly a right evening star, but you can consider this as a double top. If you know price action, you will read market like a pro. But if you just follow the strategy, yes, 20 EMA crossed 50. You have a trade here, central pivot range, target next S1, boom. Morning before 10:30, you have made your money. This does not work. So the setup works when 50 MA is at the central pivot range. Now see here, so the crossover has happened yesterday. So you know market is in downtrend, the lower circuit is broken. This belongs to sales. This is a separate strategy. You take your trade with the trend, make money. But when the 50-day, because this is coming, although this is below CPR, on this day, the 50 MA was at the center of CPR, right? So this is qualified. Sometimes you might get confused. Okay, it is crossing here, but 50 EMA is below CPR. Should I take the trade or not? You should take the trade. Our condition is on that particular day, the 50 EMA should be at the center of pivot, either morning or afternoon, wherever. I don't care. It is there in the morning. Sorry, it should be in the morning. So morning opening, it was at the center of pivot range. It crosses above, enter. What do you see? How much money you have made? Here, there's nothing. It is there. The why 50 MA, do you understand? The why not 200 MA? Why not, what do you call, 100 MA? Why not 20 MA? I have strategies for everything. I just wanted to share what is the maximum strategy which can make you money. What is the strategy which can work maximum number of times? See, I have a lot of setups here. These are all setups with conditions. This is 50-20. This is 200 MA. Currently, I'm sharing this, right? I have a lot of setups, winning setups to share and make you a pro in trading. But please do understand that whenever we bring the video, we are bringing it with passion, and this is not just for viewership or something. This is genuinely sharing the knowledge what I have gained during my option trading. Where does the next setup comes? See, it is above CPR. Does not work. See here, it is at the central CPR. Yes, market faces resistance at R1, comes down, and along with the upper circuit CPR, 50-day MA is broken upside. Enter your trade after the next candle, boom. Have you seen so far we are stop loss getting hit? So that is the power of this strategy. Now here you can consider, okay, 50 MA is there, but nothing is crossing over. The previous day around 215 only 20 MA and 5 MA has crossed over. Your bias should be on buying side, but the strategy does not work on that day. It works here, yes. 50 MA is here. Price gaps up above 50 MA, breaks the 50 MA downside, enter the trade. Big money. It's a range bound. Even if you have taken a counter trade here after 50, you have a small scalping opportunity. Watch this one, the beauty. The 50 MA, 20 MA is overlapping, almost overlapping till previous day. On the opening day is also it's almost overlapping, but you know that whichever side it breaks or 5 EMA first gives you the sign. It goes down, takes a sharp reversal pin bar. Your stop loss should be above 50 MA or above CPR, but it faces resistance near 50 MA for almost 45 minutes, and then slowly it keeps going down. It didn't even cross about 20 MA till 3 p.m. So you could have made nice money on this particular day. Watch this one. 50 MA is here. First 5 MA crosses above 50 MA. we take the trade because it is above the CPR, condition is met, but it will hit your stop loss. How much stop loss it is hitting? This is the first stop loss you have seen getting hit, right? When you're trading in market, winning and losing is part of the business. How much you're losing measures your attitude and measures your altitude of how much money you're going to make. So this is all your stop losses. Once the entry candle below price closes or below 50 MA price closes, so you have the direction. The strategy itself tells wherever price cuts or moving average cuts 50 MA, take the trade with that particular direction. So it breaks down. If you have taken a counter trade, you could make money. 1:2, 1:3, or from CPR to S1, that way. Above S1, you can keep the stop loss. So here, okay, CPR, the 50 MA is near CPR. So both the MA and EMA is above it. Somewhere it tends to cross here. This is the central of CPR. If you have taken it, it will hit the stop loss and market will just go into sideways. You can't help it. This is how market works. 60% of the times market will be in sideways. It won't be trending. So on this particular day, you can decide, okay, take minimum loss and end it. So if you're a pro trader, right? If you're a master trader, you will understand market is in the previous day range. So until the previous day range, which is this is previous day high or previous day low is broken, you have less chances of market trending. See, it broke the 2 days range here, market went down. So this is common sense. While trading, you could understand this easily. So, all right, let me go. Okay, this does not fit. Okay, watch here. Previous days, a huge gap up, does not fit. Oh yeah, this one. Okay, this is slightly above, so we can consider it does not qualify. Keep it simple and stick to the discipline so that you can pick up the winning trade. So far I have shown you, okay, this is still January 27th. Even if you get 5-6 winning trades, you will make more than 300, 400, sometimes even 500 points in Bank Nifty. So that is the power of this strategy. Now here, see, center of CPR, 50-day MA. So price breaks at the opening itself, you will take the trade downside, but market goes completely sideways. Where will your stop loss gets hit? Your stop loss gets here around 1250, right? So when you take a trade, you have to wait for 1 hour, and if it's not moving, you will exit with small stop loss and you will wait. So here at 1250, market is taking support near the lower circuit and breaks the 50 MA and central pivot here. And if you had taken here, you will have big trade, big money. Simple, very simple strategy. Now add this strategy to my first 15-minute secret. I have told you in Nifty and Bank Nifty what is the initial balance, and whichever side first 15 minutes candle is broken high or low, there's high probability market will be staying at that particular side until a mean revision happens. So first 15 minutes is this 3 candle. Did it break the first 15 minutes candle? This is experience. Because I'm experienced, I will tell you, but there is a dedicated video made on this. You can watch that. And with that knowledge, you know, okay, yeah, it's not breaking, it's not breaking. Okay, it broke here, first 15 minutes, let me wait. Okay, this one came, hit the stop loss, something is wrong. Here you will see, okay, it broke upside. Let me ride the wave with the 5 EMA. Look at the momentum. 5 EMA, 5 EMA, it closed here. This, it closed till 245. You had an uptrend. It came 20 MA, took support, went up. And my last one, everything overlapping, central pivot, descending CPR. Okay, market, you will wait. First sign is 5 EMA moving away. See, in the real time, what happens is real-time candles will be moving up and down, and 20 MA is a lagging indicator. After the candle is moved, 20 MA will move. So that's a reason why 5 MA is added to gauge the momentum. The 5 MA breaks. So you have the candle has broken downside. This is double top. This is the selling zone. So lower CPR is broken. First 15 minutes is broken up downside. It goes up, test, comes down. So overall, you know, you have a bearish bias. So you will wait. Bias alone will not help. Now here the lower CPR is broken with these two candles. Your stop loss is upper CPR circuit. If you enter, even for next 1 hour, it is going sideways, but you know your stop loss is above CPR or above 50 MA. And if you hold it, think how much money you can make here. I told you, you will be entering here, right? Below this 37,462. The stop loss is it here with this green candle. Let's assume you're going to wait till the end. 36,708. Almost 350. 37,450. 37,450. Oh, 37,450 plus 36,760. So 600, 700 points. Now, hope this video helped you guys. I had to explain it slowly and show the chart, but the strategy itself is very simple. It's a no nonsense strategy and it happens very frequently. Okay, and the only condition is if the price is opening very close to the 50 MA, then you have a trend. Upside, downside, don't care. You have a trend. You can spot, you have a trade and you can just wait patiently like a hunter and take the trade whichever side the price action is giving you the direction by breaking the 50 MA. Now this way you can master this, and if you purely stick to this strategy alone, this will be happening at least 10 to 12 times in a monthly time frame, and out of 10 to 12 times you have 7-8 short trading opportunities where you can capture maximum amount of money in Bank Nifty and Nifty. Thank you all. God bless you. Have a good day, guys.